Good morning, everyone, and welcome to the Buying a Home in the Netherlands webinar, the new build edition. Thank you very much for taking your time up today to listen to me for an hour and a half, and my colleague Andrew. We'll be talking about new builds today. Some good things to know before we get started is, of course, today's session will be recorded. We'll most likely share it tomorrow already, meaning that everyone will receive not just a recording of what I'm saying, but will also receive a copy of these slides. Let's get started. Well, normally my colleague Philip van der Broek is hosting this webinar, but unfortunately he is out today. So, well, unfortunately, but fortunately giving me the chance to give this webinar. I'll tell a little bit about myself. I'm actually not from Belgium, I'm from the Netherlands. I live in Amsterdam North currently in a new build property. I'm not a proud father of a daughter, but I am a proud father of 2 cats. Who knows what the future might bring, but for now it's just 2 cats having a great time here in North. Cool. I'm not doing this by myself. I'm here with Andrew. Andrew, would you like to introduce yourself?
Sure, thank you very much. Hi everyone, my name is Andrew. I'm here on behalf of Viisi Expats. Viisi is a mortgage consultancy firm. We are a team of 60 persons within Viisi, so a lot of people working and rapidly growing as well. Personally, I'm born and raised in the Netherlands. My parents are from Egypt. As you can see, that's why I have that, well, you could call it a lovely beard. Just got married a few months ago. It was quite a hectic period. I got married on the 23rd of August and got the keys to my property on the 25th of August. And the same night I went on honeymoon. So quite an exciting period that I've seen. And I will explain you a bit more about what you should keep in mind when looking at new construction with regards to the mortgage, because it will be a bit different than if you look at existing construction. So that's why I'm joining today to share a bit more information about that.
Perfect. Thanks very much, Andrew.
Sure.
That will be of a great assistance. Well, we'll be talking about a few things today. First of all, a small introduction of what a new build is, of course. We'll be talking about some pros and cons. I'll be sharing some market information. Of course, what kind of prices, what kind of costs you need to keep in mind. We'll move forward with the buying process. It's a little bit different than buying an existing build, so good to have an overview of what you can expect from this process. Then some technicalities like the 5% rule and the guarantee, where you can find some listings. As we know, with existing builds, everything will be on Funda. With new builds, it's also a little bit different. We'll be talking about some financial topics and mortgage info, some good things to know as well, some tips and tops. And then last but not least, we'll be talking with Rick about the Q&A. So good to know, guys. If you do have any questions, please feel free to pop them in the Q&A. My colleague Rick, we'll see him, I think, on the next slide. My colleague Rick is here as well to answer all the questions live during the webinar. And if there are any questions that are of greater interest, we'll also be talking about them later on. So we'll be answering all the questions nonetheless. Cool. All right. Well, I assume everyone that is here in the webinar is looking for a home and most possibly for a new build property. Let's talk about some pros and some cons. We'll start with the pros. Good thing to know is that, well, if you're buying a new build property, you are kind of like a co-developer. What that means is that you can let out completely your own taste within the property, talking about kitchen, bathroom, flooring. Sometimes you're even allowed to think about where you're going to place the walls. You even have development projects where you can also co-develop the common areas and things like that. So there's a lot more own inbringing in that whole process. Well, as all the new build properties are obviously new, the energy labels are always very good. This will have direct impact on your monthly cost when it comes to heating, especially nowadays with all the gas prices that are rising. I'm pretty sure that's true, is that all the new build properties now also have to be gas free. So well, that will save you quite some bucks at the end of the month. As the property is new, maintenance is limited. We'll talk a little bit about that later on as well, but the majority of the maintenance on the short period after delivery is also covered still by the builder. So within the first coming time period, the maintenance will be limited. There's no transfer tax. This can save you between 2 to 8% transfer tax when buying a property. Normally in the Netherlands, when you transfer ownership from the seller to a buyer, you pay a percentage of transfer tax, normally speaking 2%. When buying a new build, there is no transfer of ownership because you are the first owner, and therefore there is no transfer tax. Saves you a nice amount. Besides that, there are no appraisal costs, as there is nothing to appraise at that moment. So the cost for an appraisal are also not needed. Of course, there will also be some cons. We'll start with the first one, is that the most obvious, that you are unable to view the property. Of course, you can go view the building site, but there will be absolutely nothing there but a bucket of sand. So unless you're a sand expert, there's not a lot of fun there. There is a subscription needed to be able to buy a property. Well, it sounds a little bit vague, but what that means is that you need to subscribe to a project to be able to be attached to the property, let's say. So before you can buy the property, you have to have subscribed to the property, shown your interest before, and only from that moment on you can be a possible candidate of buying the property. Of course, it takes some time before the property is actually there. On average, between 1 to 2 years between actually signing the purchase contract to actually being able to get the keys of the property and move in. So there is a little bit of a delay. Well, most of the prices are fixed, and therefore there's no to a small amount of negotiation possible on the price. As the majority knows, it's a very overheated market. So I would find it very cool if you are able to negotiate on the new build price currently, but we pretty much never see it currently. And then something that correlates with the 1 to 2 years before delivery is that when you buy a property, a new build property, you will be starting to pay within phases of the building process. But at the same time, you are not able to actually move into the property yet. That means that you will have the cost of your current mortgage or rental costs in the same time that you are also paying for your new build property. That means double costs with existing houses. Then some market information, some good things to know. Well, if we look at the last quarter of 2021, Q4, we see that there were only 8,250 new build properties for sale. That is actually 22% less than the year before. So that is a drastic decrease there. The average house prices, of course, went up. That correlates with the thing I said before, with an average price of 466,000 euros. That is again 14% higher than the year before that. And then the amount of days that it took for the project to be sold out was on average, well, 30 days for 50% of the apartments, and actually 30 days for 75% of the houses. Good to keep in mind. Besides that, the prices, just like with the existing builds, have been going up. If you compare the prices with 2015 to Q4 of 2021, the price index went up with 170.7%. So that is a quite big increase. And I know that the ABN AMRO Bank just revised their expectation of this year. I think it was around 12.5% before, and they now adjusted it to 17%. So prices are still expected to keep rising. Well, one of the questions we asked a lot is why are the prices increasing? Well, we have a number of reasons here. First of all, there are currently quite some fiscal benefits in the Netherlands to buy a home. One of them is the tax exemption. If you're buying a property under 400K as a first home buyer, and if you are under 35 years old, you don't have to pay the transfer tax. Well, this is something that generally affects the existing built properties, but in its turn also has effect on the new built properties. There's an interest rebate, meaning that at the end of your salary interest deduction, you can also deduct the interest that you're paying on a mortgage. There's no capital gains tax in the Netherlands, meaning that if you sell your property with a nice capital gain, and then this is not taxed, you can fully reinvest it in a new property or anything else. Currently, the interest rates are low. I know they are rising slowly, but nonetheless, they are still very, very low, making it, again, very interesting to buy a property. On the other hand of the spectrum, the rents are actually very high as well. Something that I think is very unbelievable, but it's actually cheaper to pay a mortgage 9 out of 10 times than to pay the rent of that same property, meaning that it is very attractive again to buy a property instead of a long-term rent. And well, as we saw in the previous slides, is that there is still a lack of supply, meaning that the demand is just higher than the amount that is offered, which is a simple mathematical trick, or a simple mathematical statement, which means that prices will therefore keep rising. Besides that, something that we see also that has Corona that has impacted it is that the cost of materials are rising, which again have an effect in the cost of buying a property. Then some other prices and costs that you should keep in mind. Well, first of all, there are some benefits when buying a new build property that you don't see when buying an existing build. For example, that the notary fee of the transfer deed is already included in the purchase price. So normally when you buy a property, there's a lot of additional costs. Now you will see that in the next slide that are added to the closing fees, so to call. When buying a new build property, the notary fee of the transfer deed is already included. Good to keep in mind is that the mortgage deed is not included, so we still need to go to a notary and pay for those costs, but the transfer deed is already included. The registration in the land registry is also already included. Not a huge cost, but still nice that it's included. And well, most highest cost here, I would say, is the VAT on the purchase price. This is also already included. So normally what we say is you don't pay transfer tax, but therefore you pay VAT. However, transfer tax is something that is added on top of the purchase price. VAT is something that is already included in the purchase price. So not something that is a surprise after buying the property. Then some other costs that you need to keep in mind. Not all of these are applicable for every person, but very important just to have the whole list. So first of all, there's no transfer tax, so you can keep that out of the loop. The VAT is already included. The registration on the in the land registry is already included as well. The mortgage deed depends a little bit on where you're buying, is between 600 euros and 1100 euros. Also depends on the notary that you're choosing, of course. Transfer deed, like I said, is included. Then, well, you can go for a bank or a mortgage broker. My advice is always to go with a mortgage broker, just because they do have access to a lot more products and mortgage lenders, actually. The example that I always use is that if you go to a bank, it's like going to the Nike store. They will only have Nike shoes there, and they will try to sell you a Nike shoe. If you go to a mortgage broker, it's like hiring a personal shopper. They don't really care what kind of shoe you're buying, as long as the shoe fits you, and you will have great benefit of that shoe. Therefore, we always advise you to go with a mortgage broker, mortgage advisor. Then a typical real estate agent is also something to keep in mind. Normally this is around 1 to 2%. However, if you choose to work with Expat Housing Network, myself, we charge a fixed fee. We'll come back to later to the actual amount mentioned. Then the appraiser, well, also not needed for a new build property, but on average, this is about 800 to 1,000 euros if you're buying an existing build. So that's a nice save as well. Then, and a technical inspector, well, normally we always have a technical inspector come in the property to inspect the house before we actually sign the purchase agreement. This is of course not possible with a new build because, well, there's nothing to inspect. However, you do get a so-called like a technical report, which has, or technical description actually, which is like a total technical description of the property. And it can be nice to have a technical expert look at the technical description to see if there are any red flags or things to keep in mind when moving forward with the process. They are willing to do that check for around 50 euros, which is something I would advise you to definitely do. The same goes for the delivery report after the property is delivered. That cost is a little bit higher, but still something that is advisable. If you do not speak the Dutch language fully, and it's not your mother tongue, it's actually by law needed to have an interpreter at the notary. This is a person who will read through the transfer deed and mortgage deed with you. The notary actually has to do it in Dutch, and therefore an interpreter is needed to be present. Depends a little bit on what language you choose, how much that costs. It's pretty funny that there's a difference in there. But on average, we see that English is the cheapest. So if your English is proficient, which I assume it is as you're listening to me talk English, then I would say just go for the English one. That's the best choice. Then a deposit is needed, a 10% deposit. You can either go for a 10% deposit in cash, or you can choose to go with a bank guarantee. Typically, this is 1% of the guaranteed amount. And if you are choosing to have a mortgage with the NHG, and I think, Andrew, this is an old percentage, because I think it's currently 0.6%. Is that correct?
That's correct indeed. Yeah.
Yeah. Well, that makes it a little bit cheaper. So please excuse the 0.7, but it should be a 0.6. But the NHG, well, if there are any questions about it, we'll talk about it later. But it's a kind of an insurance on a mortgage, I would say. Plus you have access to cheaper interest rates. However, there's a fee for that, and that is in this case 0.6% of the mortgage amount. On the right side, you see if the costs are tax deductible or not. Have a look at it tomorrow when we send you all the slides. We also have a calculator on our website if you want to have a look at that as well. Then payment terms. Well, payment terms are a little bit different comparing new builds to existing builds. With existing builds, you pretty much pay all in one go, and that is when the property is delivered. However, with new builds, like I said, it's a little bit different. I would say there are two major points to mention, and that is first, you pay a certain amount when signing the purchase agreement, and this is also when you purchase the land, plus some extra costs, for example, for building costs that have already been executed at that moment. This is, sorry, I said purchase agreement, I meant a transfer deed, but this is when you pay that amount. And then the rest actually goes into a building depot or deposit. And how it works from that moment on is that you start paying for the actual work that has been built. So at that moment, if they start building the foundation, you pay for the foundation out of that building depot. If from that moment on they start building, you know, the next stories and the garage or things like that, you will start paying accordingly. This will all be defined already in the purchase contract and in the transfer deed, so you know exactly when those costs need to be done and what kind of percentages you need to think of. Very important to share these timelines with Andrew as well, so that he knows exactly when he is able to, or when he should make the payments on your behalf. Then the process, also a good one. So Well, first of all, we've been talking about a few details, but nothing can happen if you can't find the right home. So first it starts with actually going through new build projects, searching the right project for you, and subscribing to certain platforms and certain developers to be able to actually become part of that project. Well, when you find something that you like, you most of the time together with your buying agent, make a meeting or schedule a meeting with the selling agent or with the developer directly. This is a moment where you have the time to ask all the questions that you want. The developer will share all the details with you, share all the drawings, the renderings, any 3D big pictures or things like that, to explain everything about the project. This is also a moment when we as a buying agent get a library full of information and documents that we will review on your behalf. Of course, we'll also go through it together, make sure you know exactly what the project entails. And from that moment on, we'll decide, of course, if we want to move forward or not. This could also be a moment if there is already a full technical description to hire a technical expert to have a look at the technical description as well. As our knowledge goes pretty far, the knowledge of a technical expert is very refined to a certain topic, and it could be nice to have someone to peek out all those kind of things. Of course, it might be that after having a chat with the technical inspector, after us reviewing all the documents, that we still have some collective questions, and we are always free to schedule another meeting with, again, the seller or developer to ask the final questions. From that moment, we'll probably have a very clear idea of what the project entails, and to either move on from there or not. Well, if we have decided to move on, hooray, that's great. We'll move forward with signing the purchase agreement and the building contract. This is a first official document that you sign, that you say, okay, I want to intend to move forward with the purchase of the project. And from that moment on, all eyes are focusing towards build and all further details. Good to know is that there is, of course, a cooling off period. Normally, when buying an existing build, the cooling off period is 3 working days. When buying a new build project, this is a little bit longer. It's actually 1 calendar week. So you have 1 calendar week to wake up in the middle of the night and think, oh my God, what did I do? This is not going to work out, and you can pull out without any financial consequences. After this period, there are financial obligations and therefore also financial consequences from pulling out. Well, this is also the time that mortgage is requested and hopefully approved. Typically, this takes around 6 weeks after the purchase agreement is signed. I think Andrew can do it a little bit quicker, but typically to also not take any risks here, I think it will take around 4 to 6 weeks. If this is approved, then you get a so-called hooray letter. The hooray letter is something you get from the developer when there are no reasons anymore for the project not to go through. This could, for example, mean that 70% of the project has been sold, that the in Amsterdam ground lease split has been given off, that all permits are approved, things like that. If everything is facing the right direction, everyone will receive a hooray letter, meaning that pretty much the build can start. Before we actually have the building start, we'll go to the notary. This is to sign the transfer deed. And that is once you really become owner of the project. However, still at that moment, nothing has been built, but everything needs to be signed before the contractor can actually lay down the first brick, so to say. This is also when the building depot is opened up, and the contractor can use the cash available in the building depot to start building. Then the building works start. This typically takes between, from a very small project, 9 months, to a very big project, 2 years, and everything in between. And then there are also a lot of variables at play that could delay the project, of course, or speed it up in the other way around. But I would say on average 1.5 years to have your new build property built. In that time period, there will be moments that you are invited by the developer as well to come have a look. If they already finished your story of where your apartment is, or if you're buying a house, if, for example, the ground floor is finished already, you are invited to have a look. If it's a fully co-development project, it'll be a little bit more often. And then at one point, it's the happy days, the property is delivered. Right before that, we'll go into the property with the technical inspector or technical expert to have a look, make sure everything is fine, everything is working like it should. The developer will also be there also to explain again everything, to make sure that everything works as it should. And then it's officially the delivery moment. That is also when you get the keys of the home, and when you are able to move into the property. It doesn't end there. We'll go into a little bit further detail on that, but you have a time period of a guarantee, and we'll talk about the specifics of the guarantee later on. But this is a so-called, how do I call it? A few months where if there are any defects or anything like that, that the builder or the contractor are still responsible and need to do any maintenance or fixing at that point. Cool. So next stop is the 5% rule and the guarantee I just talked about. Well, first of all, the 5% rule. 5% rule is a legal right of the buyer, and something that you can always account for. What does it entail? It's a sort of a deposit or bank guarantee with a notary. So 9 out of 10 times the final payment that you make to the builder is 10%. And this 10% you can either pay directly to the builder from the depot, but we always advise you to split it as it's your legal right. 5% to the builder and 5% in the depot of the notary. Why you would do that is because if there are any defects at the end, or if there's are things that haven't been built like agreed upon, you can use that 5% leverage in the 5% that's in the notary as leverage to have them fix it. And they want every penny that they can get, so they will try to fix it and make sure everything is fixed like it should, so that they can also get that extra 5% from the notary at that moment. Same goes for the bank guarantee. For apartments, good to know is that 5% is actually also for common areas. So if the common areas aren't fixed like they should, you could again use that 5% as leverage to make sure that they fix the things like they promised to fix it. Good to know is that it only goes for defects after delivery. You don't want to free the amount equal to the effect, meaning that if it's only 1% of the property that is not fixed, don't free out the rest of the amount, but keep the whole amount so that they have again extra leverage to fix what they should fix. The reason for that is also that the interest rate of the non-payment is too high at that moment. Then the guarantee. Well, you have first of all, standard contractual guarantee, something that you see in every contract. There are a few time periods for that. First of all, the 3 months. This is like the 5% rule I was just talking about, 3 months after delivery. Then between 3 months and 6 months, the builder is actually still responsible for any maintenance that occurs that shouldn't have occurred, let's say. Then actually after 5 years, they are still responsible for hidden defects. And believe it or not, after 20 years, the builder is still responsible for any major defects that pop up in the property, either a house or an apartment. Even after, for example, 17 years, you can still call back to the builder and say, look, this is not working like it should. all the details about this will be in the contract as well. What is seen as a major defect and what is seen as a hidden defect, for example. But still nice to see that yeah, there are guarantees in place for that. Now, it is also possible to have a contract via so-called insurance companies like Woningborg, SWK, or Bouwgarant. If we do get into the process of buying a new build together with you, of course, we'll pay more attention to this. But feel free to look it up later on as well, what kind of yeah, companies these are. But you will receive some extra coverage with them. And that is, besides the things that we mentioned before, is that you actually have a 6 years guarantee. Well, 6 years of maintenance and things like that will fall onto the lap of the builder. Then within specific parties, the guarantee period can be shorter, of course, but the majority is the 6 years, like mentioned before. And major defects have an actual 10-year guarantee. Of course, you still have the 20-year major defect, but the yeah, extra 10 years on top comes with again, the Woningborg, SWK, or Bouwgarant insurance. Something that actually doesn't cost extra money. It just depends on the building or contractor that you're working with, if they are working with a company like Woningborg, SWK, or Bouwgarant. Alrighty, and then well, we've talked a lot again about new builds, but first of all, we need to find one. And where are we going to find these new build properties? Well, first of all, we have a website in the Netherlands called nieuwbouw-nederland.nl. This is a I would say kind of like a funda, but then for new build properties, where you can find all the expected new build projects and to the current new build projects. Plus they of course have nice filters, so you can see it per price, per city, per certain requirements, etc., etc. Besides that, a lot of the municipality websites throughout the Netherlands also have yeah, their new build page, I would say, as they also see that there's a housing shortage. They are pushing the new build projects as well. So if you're looking at the Amsterdam municipality website, the Den Haag municipality, or the Rotterdam municipality website, they have a lot of new build projects mentioned there as well. However, I do have to say that the municipality website isn't updated as regularly as, for example, Nieuwbouw Nederland or Funda. So it might be that there are some projects listed online where they're already totally sold, but it can't hurt to have a look for sure. Then you can also just Google a nieuwbouw or new build developers on Google, for example, and you'll get a whole list of developers in the Netherlands. And it can't hurt to go to their project websites and just to register at their newsletter, so that every time there is a possible new build project that is coming to be online, or that is already online, you will get a heads up from it. Or maybe some projects where it's actually sold out, but some purchases fall through, and that you get first pick from that project. So good to keep in mind. Besides that, of course, we have our trusted website Funda, mostly used for existing build, but you see a lot of new build projects on there as well. This is something that is regularly updated. Yeah, also good to keep in mind when looking for a new build property. Besides that, you can definitely also use the network of your buying manager. We have a lot of contacts when it comes to developers, selling agents that focus only on new builds, or any other contacts, and the majority of the time get a heads up before actually having the project listed on Funda. So it definitely can't hurt to work with a buying agent at that point. Cool. Then I'm going to be looking at you, Andrew, for some financial topics and mortgage info.
All right, great. Thank you, Ludo. This is a question that I get a lot during a call. So what should I keep in mind and be aware of when looking at new construction and comparing it with existing houses? Let's start on the left, of course, with existing houses. You'll have purchase costs to keep in mind. So as Ludo already said, there probably will be a transfer tax if you buy something exceeding the 400K. There will be also a property deed. There will be an appraisal report. So there will be a bit more cost if you compare that. You heard me say appraisal report. With existing houses, the market value of the property is determined by this. And this is actually an evaluator going to the property and saying, well, I think your property is worth 500K or 450, for example. And that's also what you normally can only finance at max as well. With new construction, it works a bit different. Your market value, the market value of the property is actually determined by the purchase price for the property in the ground, plus any additional work that you'd like to do. I'll explain that a bit later as well. And it's vrij op naam, so since you're the first owner, there's no official transfer tax to be paid. What you do have to keep in mind, and I think that's the most important thing, and I think that was also a question with regards to paying the mortgage. Might be nice to go to the next slide, Ludo. Then I'll get to that. So this is an easy example to show you what would happen if you would buy an existing construction in comparison to new builds. Starting with the existing construction on the left, so you have a purchase price, 450, transfer tax is 2%, so notary costs, you see an appraisal, a report, our fee, and Expat Housing Network's fee. Our fee increased a little bit, but I'll explain to that a bit later. But what you see here is that the total cost would be a bit more than 467K. Your market value, I assumed here that the market value is 450, so the same as your purchase price, which we see normally with existing construction. Meaning that that's also what you can finance at max. So the difference between the 467 and the 450, that's the own capital that's required. So that's 17K. New construction works different. So let's say you spend 450, you also only have notary costs. So that could be 600, could be 1300, depending on the notary office, of course, and the translator. No appraisal report, no transfer tax. And then of course, still our fees are applicable. And as you can see here, the total cost would be almost 7,000 euro. So that's quite a difference that you'll find here. What you do have to keep in mind, I think you skipped one slide. Yeah, thank you, Ludo. As I said, determining the market value of new builds with existing construction is quite straightforward. With new construction is purely the cost for the ground, cost for the construction, any additional work that you're planning to do. I think this is very important to be aware of because not everything is included in how you normally would get the property. So always double check with the selling agency. And of course, I think Expat Housing Network can help you with that as well, is to double check, is there already a kitchen included? Is there already a bathroom included or not? Always be sure to double check certain things like that, because normally what we see is that, well, you might see the purchase price as it is, but it's quite logical to need another 5 to 10% on top of that purchase price to be financed. It might be that the windows are too small for you, like to have larger windows, for example, already include certain things such as painting. So these are things that are very important to be aware of. The nice thing is that you can finance everything at full. So if your income lets you, you can finance all these things as long as it's stuck to the property, as we say. So don't use that money for furniture, but for example, to your garden or put in floors in your property, all of that can be included. And this is included through something called the Home Improvement Specification Form, which is a simple form on one page stating what you're planning to do additionally to the property. So for example, if a kitchen is not included, put in 15K for a new kitchen. Or sometimes you see that there are certain standard bathrooms delivered in properties, but you can choose more luxury options, for example. All of that could be included in your financing as well. So what happens is you fill in that home improvement specification form, let's say about the property for 450, and you need another 30,000 euro, then you have to specify, well, that 30,000 euro is 15K for the kitchen, 5K for example, painting, 10K for all the floors, and then your market value of the property will be the 450 plus the 30K, meaning 480. So that's all included, and that will also be the market value of your property. Looking at the next slide, this is, I think, the most important thing. Keep in mind that you already start paying for your costs for the mortgage of the new construction as soon as the construction starts. So as soon as the construction starts, you'll be having double living expenses. That could be your current mortgage or your current rent, besides from the new mortgage that you will have. This double housing cost, so you will not be paying the full monthly payment at first. This normally starts at a lower level, and then it increases over time to the full monthly payment at the moment that you get the keys to the property. So normally what happens is that, well, if you get, as Ludo said, if you get the hooray letter, that means, well, everything has been met. You can go to the notary, sign the mortgage deed, and then they will start the construction. Normally, the price of the ground is paid immediately at the notary, plus, well, for example, the remaining amount for the construction that will start immediately as well. And then what happens is that every time the construction hits a new phase, so a new, let's say we put in the next floor, we put in the kitchen, we put in etc., etc., etc. Every step that you take, every phase that will be met, you will see that your monthly payments will also increase a bit. So to make it an easy example, you buy a new construction for 500K, 250K is for the ground. So that means that you actually already start paying for 250K worth of a mortgage for the ground. And every time a new phase is hit with the remaining 250K for the actual construction of the property, every time a new phase is hit, so that actually means that they need extract more money to start continuing with the remaining period. Every time that happens, your monthly payment will increase. So if it starts at 800, then they hit a new phase. So then it gets to 850, 900, till you get to the full monthly payment. Very important to keep in mind, because you need to have either enough savings to cover that period or be well aware of the fact that you will not save a lot during the construction period. Since we don't know when which phase of the construction period will start, we always say it's maybe better to assume that you'll be paying 80% of the regular monthly payments during the construction period. So from the moment that they start till you get the keys to the property, knowing that it will start at a lower level, but it will increase up to the full monthly payment when you get the keys to the property. We just don't know when which phase will be hit or will be met. Could be some delays, for example, in the construction. So that's why it's safe to assume the 80%. So this is very important to keep in mind here. This construction deposit is normally valid for, well, 24 months to 36 months. So that should normally be enough when looking at the whole construction period. There are a few important things to keep in mind also when looking at the mortgage. So the double housing costs are purely for your own financial situation. So be aware of that there will be double housing costs, and that you should be able to either pay that or save significantly less during the construction period, knowing that it might take up to a year or two. A few other important things to keep in mind: if the construction has already started, then it might be that there is some construction interest that is applicable, because the constructor has already paid certain amounts in advance. And of course, they want to get that money back from you. So it might be that there's some construction interest applicable, which can also be included in the mortgage with some of the mortgage providers, so not all of them. There are a few important dates to keep in mind. There's, of course, a legal cooling off period, which is normally 1 week after you've signed the purchase agreement. You can always choose to withdraw. And another one, which is the financial clause, which is normally 2 months after you sign the purchase agreement. Ludo said, well, normally we can easily arrange the mortgage within 6 weeks. That's correct. It can take even less. We always like to have a bit of a buffer, of course, looking at the time, but 2 months should be more than enough. I think the most important one are the suspensive conditions. These are conditions that are mentioned in the purchase agreement, and these are actually conditions that need to be met before they can actually start building the property. So what they actually do is, as soon as you sign the purchase agreement, you will see that there are suspensive conditions. It's called opschortende voorwaarden in Dutch, which says, well, the suspensive conditions are 9 months. And during those 9 months, the conditions needs to be met. That could be that they would like to sell at least 70% of all the properties before they start building, which is quite a normal number, normal percentage, 70%. And for example, that the environmental permit needs to be attained before they can actually start doing that. So these are conditions that normally need to be met before they actually can start, which could mean that it could take up to 6 to 9 months before these conditions could be met. Why is this important? Because we need to keep in mind the offer validity of mortgage providers. Normally, this is 3 months. With new constructions. Mortgage providers tend to be a bit more easy or have longer offer validities of 6 months, 9 months, even 12 months. But this is important to keep in mind because you do want to have a valid mortgage offer, of course, as soon as the suspensive conditions are met. So this is also something that we will keep in mind when we finance the property for you, that we double check and look at these suspensive conditions. They need to be valid. If they're not valid, then we have to reapply again after a few months, looking at the current interest rates and how they have been increasing since November. This wouldn't be in your advantage, I would say. So we will always look at the long offer validity, or we can look at a validity that can be extended, but it could be that you have to pay extension costs in that case. You can always make your own estimations online on how much you could borrow, especially if you're a next time buyer, so not a first time buyer. It might be wise to give us a call anyhow to make a more accurate calculation, so you can plan in a telephonic appointment with one of us. It's free of charge, and we will walk through your situation to see what's possible and answer all the questions that you might have. I will share the link as well. Back to you, Ludo.
Yes, sir. Well, thanks very much for sharing that. Then we have some final tips that could be very handy when looking into buying a new build property. I think the majority has already been shared, but just good to summarize it as well. So again, a check on the double costs, extra works, timing, etc., with your buying agent, but also with your mortgage advisor. Again, especially double costs, it can go into some higher numbers. If the cash is not available, this could be somewhat of a problem. Then besides that, we always say consider technical review of the documents. I've had some strange situations where, for example, the kitchen required a second so-called boiler, like heating system to warm up the heating in the kitchen to get you warm water. This was actually not totally included in the kitchen. So if you wanted hot water in the kitchen, you needed to have an additional heating in the kitchen, which is something that's very strange. But if you look over that and then your property is built and only cold water comes out, that is something you don't want to miss. So good to double check those kinds of things. Check if you are working with a SKW, woningborg or bouwgarant builder. Check what kind of guarantee they offer if you are not working with them, just to make sure that you know what you're entitled to. Check if, and that this also correlates with the technical review, what kind of extra work is needed, what is included in the project, because extra work obviously means extra costs. And well, see if this is possible to add in your mortgage, see if the cash is available from your own pocket, just to make sure, again, you have a clear picture of what you will be spending on the new build project. It's always a little bit more easy to see when buying an existing build because you're just buying the property plus some closing fees, whereas here there can be a lot of additional things that you might not have thought about before, and then all of a sudden you're paying, instead of 20,000 euros, 30,000 euros out of pocket, and that can be quite a difference. And then again, consider a technical inspector before the delivery, not just to walk through the property with the developer, but also to walk through the property with a technical expert to make sure that everything works like it should. Then some costs from our side. So we actually have a specific new build package focused just on buying a new build property, as it's a little bit different, as you saw in the process, than buying in the existing build. It's 2,999 euros. That is including VAT. We charge a deposit of 299. Once that is in, we are ready to go. Well, it consists, of course, of a personal intake. We'll search projects for you. We'll be in contact with developers to put you in contact with them as well. Of course, you'll have access to a buying consultant. We'll be there to attend meetings with the seller developer, not just once, but every time that there is a meeting like that. Also, we'll join you to the notary and those kinds of things. We'll review all the documents. We'll go through the checklists and the points of attention of buying a new build. We'll, of course, benchmark the price. This is a little bit different than doing a price research with an existing build, because there is no difference between the asking price and the purchase price, as the purchase price is the asking price when buying a new build. We'll do an offer negotiation if possible. We'll review the purchase agreement, the transfer deed to mortgage deed, and we'll be there for the pre-transfer support and assist in booking all the experts. Definitely worth doing something like this when buying a new build project. Back to you, Andrew.
Thank you, Ludo. With regards to Viisi, so we charge a fixed fee. This depends, of course, on whether you're a first-time buyer or next-time buyer, but it starts for first-time buyers at 2,595, let's say 2,600 to make it easier. This is also tax deductible, so you get roughly €1,000 back out of that. We're completely independent, so as Ludo said, we don't really care which mortgage provider you go for, as long as we choose something that suits you the best. So you can always walk in the Nike store or go directly to the ABN, but you know with which mortgage you'll come back. But we compare more than 30 mortgage providers. We're also specialized in expats, because not all mortgage providers finance for expats as well. Our fees also including any life insurance, any disability insurance that might be interesting for you, since you're buying, well, a home. This is quite a large financial step that you're taking, so it's always good to have a look at these risks, even if it's not very nice to talk about, but I think it's important to talk about these things. But all of that is also included. And a very nice thing is that we have in-house acceptation. So we have an internal acceptance team within Viisi that already checks all the documents before we put anything in motion. And that actually led to, well, quicker processing times. We actually have priority lanes with several mortgage providers as well. That's also why Ludo said, well, we can easily arrange the mortgage even sooner if needed, keeping in mind the processing times that we always publish on our website as well, to keep the mortgage providers keen on meeting these times and these processing times as well. And we'll, of course, always help you through the whole process if you have any questions. We can also easily, well, check everything with Expat Housing Network, since it's quite easy to collaborate with each other. And I've also shared a link in the chat where you can plan in the telephonic appointment if you want.
Thank you very much, Andrew. All right, then we've come to our final topic today, and that is the Q&A. I think my colleague Rick has already been quite busy with answering all the questions that we've received, but I think we still have a few left. If there are also some burning questions, please pop them in the Q&A so that we can answer them accordingly. Your time to shine, Rick.
Hi guys, nice to meet you. Yes, we do have some questions left. I think mostly mortgage related, so those are for you, Andrew.
Sure.
First, a question of Jonathan. Usually your mortgage is 5 times your yearly salary. Is that the same principle for a new build?
Yeah, that's correct. It's actually the more you earn, the higher this multiplier becomes. So it really depends on your income, but you can schedule a call and we can make an accurate calculation for you, Jonathan.
All right. Then I think this one is for you, Ludo. Assuming the house condition between a new build and an existing one are similar, what's your opinion on the purchase price between the two?
Well, if the condition is pretty much the same or very similar, then I think purchase price on a new build is definitely more attractive comparing to an existing build. The reason for that being is that, especially in the current market, there's a lot of overbidding going on. People are highly trying to secure a property and are not afraid to use a lot of cash for that. When buying a new build property, you are buying a project that or a property that doesn't exist yet, and therefore you're buying into a project. There is no overbidding in that. You are just buying the price as you see on Fonda or as you see on the listing site. Of course, there, like we mentioned before, are additional costs for that. But looking at a finished project and a project or let's say a finished new build property and an existing build that has existed for a long time, you'll most likely be spending a lot more on a existing build than on a new build. And therefore, my opinion would be to if the condition is the same, to go for a new build property.
All right, thank you.
Yep.
Then if I'm a second time buyer, do I need to pay the transfer tax?
Well, it depends a little bit, of course, on what kind of property you're buying. If you are buying a new build property, you're never paying transfer tax, as there is never transfer tax within buying a new build property. If you're buying an existing build property, it also depends a little bit. If you have used your transfer tax exemption before, if you are able to use the transfer tax exemption at all. To give an example, if you are buying a home of 450,000 euros, then you will indeed be paying transfer tax. Like I said, normally the transfer tax is 2%. It can be a little bit higher if you're using the property just for an investment purpose. Not very of importance now, but that would be 8% of the purchase price. So there's definitely a bigger difference in there. There are also some additional things to keep in mind when getting a mortgage for an investment property. But assuming that the majority here is buying a property to live in it, yes, you will be paying 2% transfer tax over an existing build. If you're buying a new build, then transfer tax is never a thing.
All right, thank you. Then Marie, if you have any questions about a specific region, feel free to contact us and we can schedule an intake. Then about the lottery system, is it too frequent while buying a new build property?
Yeah, it's pretty frequent. What we see most, I think, is first come, first serve. But we also, depends a little bit on the project. If they have so many people that are interested, they'll go for a lottery system. And you really just have to be a lucky one of the few to be enrolled in the project. What we see a lot though is that there's a whole bunch of people applying for the project that have applied for like 5 to 6 projects. And then once they're actually enrolled, they either can't get their financing in order, or it's too expensive for them, or they have already accepted and signed a purchase agreement of another project. So if in the first phase of the lottery, everything is blocked, a month later, it might be that a bunch of those first options, let's say, have fallen through. So definitely don't give up hope once you get into the first lottery round. There might be some more chances there.
All right, thank you. Then I heard there are also a lot of do-it-yourself options. What is the mortgage process in this case? For example, when buying the land and building your house, the house yourself.
Yeah, quite specific. I think if you're looking with regards from a mortgage perspective, this is called self-bouw or CPO. Sometimes that's a possibility. Not all mortgage providers accept that. So it's best to schedule a call to see what your options are in that sense.
All right, thank you. Then also regarding mortgage related, during the suspensive condition period, does the mortgage payment start?
No. So during the suspensive condition period, there will not be any payment. But as soon as these conditions are met, then you will get the hooray letter stating when they will start the construction period and when you'll be at the notary, and then you'll start paying for the mortgage. So you purely lock in the interest rate as soon as you sign the purchase agreement, and then you just have to wait.
Yeah, so the mortgage payments, I think, start at the moment that you sign the transfer deed and mortgage deed. And then you start paying your monthly installments. Am I right?
Yeah, correct.
Okay.
Let me see. Well, there's also some questions in the chat. Right. How does prefab housing building process work? Also quite specific question.
Yeah, that's it's not so different. Prefab just means that a majority of the work has already been done in a factory instead of on the spot. So I would say that it just depends on the project. Not a huge difference. Sometimes it's a little bit cheaper because they can already fix everything in a factory, have all the concrete walls done, for example, and the foundation, and they just have to ship it to the building site and place it down there. So the process itself is the same as buying a regular new build property. The building method is maybe a little bit different, but when it comes to start to finish, there's really no difference there.
Thank you. What if family wants to help for young buyers on their first home? Are there established means to bring money from abroad? For example, purchase price 500 and mortgage 400.
I can answer that.
Yeah,
So here in the Netherlands, if your parents are living here in the Netherlands, they have the option to give you a financial gift, as we call it, up to 106K. If your parents or family is from abroad and they have never lived here in the Netherlands, they can transfer as much as they want to. What needs to be taken care of is something called a gift agreement. We have a draft for that because the mortgage provider might ask questions. Just to give an example, if you're 25 years old and you can put in 300K, they would like to know where that money came from. And with a gift agreement, we can show that it's not borrowed, but that it's actually a gift.
All right, thank you. Then, am I allowed to sell the new build as soon as it's built or during the building process, the building phase?
Yeah, that's a good question. So definitely if you just sold, well, it depends a little bit on where you're buying. So you now see a lot in bigger cities that there's a self-occupancy clause attached to the purchase contract. And this means that you need to live in the property for a certain time of period before actually being able to sell the property. The reason why they do that is to avoid investors buying these kinds of projects and just buying 4 or 5 properties in a building and then directly afterwards selling it with a good profit, because there's no overbidding. It's very easy for them to buy and then sell again. And as you all know, there's still a shortage, and therefore the self-occupancy clause is called into life. This means that, and I know for Amsterdam, I think it's 3 or 4 years that you need to live in the property before you are actually allowed to either rent it out or sell it. So majority of the time my answer would be no, it's not allowed to sell during the building and right after, because of the self-occupancy clause that we see nowadays.
All right, thank you, Ludo. Then a question of Leah: if the housing markets bubbles pop, do you think the value of new built properties will also plunge?
That's a good question. We again, something that we hear in the bigger cities like Amsterdam a lot. Is this a bubble? Is it going to pop? Is it going to fall down? To be honest, when Corona just hit, I thought, okay, well, this is going to be a downfall for the market, and we saw exactly the opposite. Prices rose like a maniac. So yeah, I still don't expect prices to pop anytime soon. However, if there is a situation where prices plummet, I personally expect that existing builds will plummet more than new builds. The reason for that being is because when buying a new build property, everything is new. You have the triple glazing, no gas, you've got the floor heating, the best energy labels. So they will, in that sense, be worth more than a property that has been lived in for a very long time, might not have the best energy label, might have had some leakages before that have been fixed. It's just the quality of a new build will most likely be better, and therefore value will be more constant than an existing build. Yeah.
All right. Then a question of Ivan: is there a chance you buy an older house or not a new build without paying transfer tax?
Could be. Yeah, could be. But two things to keep in mind to get the exemption: you need to be below the 35 years, and you need to buy a property below the 400K. If that's the case, you can buy it as old as it is, so that shouldn't be a problem.
Yeah, and I think you need to be a first-time home buyer.
Yeah, correct. Yeah,
well.
first-time buyer. Yeah, and of course you shouldn't have used that exemption before, as you mentioned. Yeah.
All right, thank you. And what's the average time it takes for a new build to be completed?
Yeah, fair question. Again, this also depends on the project. Typically, I'll say between 9 months and 2 years, but that's a very big number to say. Let's say. So I think typically 1.5 years is something that's fair to say. However, now, for example, with COVID, the building costs, like the material costs, have gone up. It was very difficult to get a good quality wood. And therefore there were a lot of delays. So a project that could have been thought to take 1.5 years then took 2 years. It can also go the other way around. If all of the sudden wood becomes very cheap, it's very easy to find wood, and therefore instead of 1.5 years, it took just 1 year, for example. But I think on average 9 months to 2 years is a fair time frame.
All right, thank you. Then are you allowed to rent out your new build property as soon as it's finished?
Yeah, this comes it is in line with the self-occupancy clause. So yeah, majority of my answer would be no, meaning that you have to live in the property yourself, and you really have to use it as your own residential property for a X amount of years before you are actually able to do anything with it, either sell or rent out. Good to keep in mind is that if you are buying an apartment in an apartment building and therefore buying into a homeowners association, there might be specific rules to that homeowners association that apply to renting out the property. Sometimes there are rules about short-term rentals, sometimes even about long-term rentals as well. So yeah, make sure that it's also allowed within your homeowners association.
From a mortgage perspective, you're not allowed to rent out the property. Officially, you have to ask permission, but they will not grant that to you because a property is worth less if you rent it out. If you want to keep the property and buy the next one, there could be an option to switch it to an investment mortgage. But that's quite specific, something that we can discuss then, whether that's a possibility or not.
All right. And can you show interest in multiple projects and then select the best option?
Yeah, well, that is something that we see a lot now, of course, with the amount of projects that are listed, as it's not so much, and the amount of people looking. Yes, this is possible. Of course, you can subscribe to as many projects as you like. Then there are some projects that actually require you to sign a letter of intent before actually signing a purchase agreement. Letter of intent is like you intend to move forward with the purchase, and they actually ask you to pay a fee of, well, I think it's €2,500 to commit yourself to the project. This €2,500 is non-refundable. So if you sign a letter of intent with multiple projects, then you will be paying €2,500 per project. And if you move forward with only one, you lose the rest of the money. So that is good to keep in mind, but just showing interest and signing up and subscribing to their newsletters and things like that, and well, having chats with developers and selling agents, that is all without strings attached. So yes, that's possible.
Thank you. Then again, mortgage related, at what point do you actually lock the mortgage price?
So that would be actually, so normally what we do is as soon as you've signed the purchase agreement, we have to start working on the mortgage, because normally you have a financial clause of 2 months. And what we do then is at that moment, we have a mortgage appointment and put everything in motion. And as soon as we put the mortgage in motion, the mortgage rate is locked. So that can be on the same day, for example, even if they start the construction after 6 or 9 months.
All right, thank you. Then are you eligible to buy a new build house if it's your third house to live and sell your existing house after the new build is finished?
Yeah, of course. That is, I don't see any problems there. I mean, it's up to you if you want to sell your house at all, if you have to sell your house, and when you want to sell your house. So there are some people who, well, are not really able to cover the double costs of the new build property and their current mortgage, for example. Then what we see sometimes is that people sell their current house, live with their parents, for example, or with a family member, or with friends for 1.5 years to save up money for the new build property. But if you are able to cover both costs, then you are totally free to keep your current home, of course, and only sell it at the moment that you have moved into your new build property. If you have the funds available to change your mortgage to indeed an investment mortgage and want to sell out the property that you're living in once you buy or once you move into the new build property, that is also possible. So it's really up to you when and if you want to sell your current property. So I think most comfortable would indeed be to stay in your property until your new build property is finished. But it is up to you, and that is definitely possible.
Thank you. I also, to continue on that, what are the interest rates for investment mortgages?
Normally they're roughly, let's say, 1 to 2% higher than for regular mortgages.
Thank you. And how long does it usually take to find a proper project to start the process?
Yeah, this depends a little bit on when you're looking. Indeed, currently, like you mentioned, there are not a lot of active projects, and the projects that are active are being sold quite quickly. But if you are, open to a broad region of areas within, for example, in the city, if you are familiar in Amsterdam, if you're open to Eiburg, for example, then there's already a lot more possible. I know that every big city is currently doing a lot to expand their city boundaries and therefore also their housing possibilities. So every area will have its new built areas. Typically speaking, I would say between 2 months, you will be able to find a project of your liking. And from that moment on, the whole process of actually securing a property there starts. It also comes down to how active you are yourself. If you have a look on a new build site once a week or once every 2 weeks, then it might be that you just miss the boat every single time. If you're very active and make sure that every project that's coming online, you are subscribed as a possible buyer, then chances will rise accordingly as well.
right? Then is the house improvement form to be assessed by the appraiser before it is considered for the mortgage?
No. So it's actually quite straightforward. You just have to fill in the form, and the mortgage provider will assume that the market value of the property is the purchase price for the ground, and of course the construction plus the additional work that you mentioned in that form. So it's quite straightforward.
All right. I think that's it for the questions in the Q&A.
Yeah, let's keep it at the Q&A. I think that's easiest. And if there are any unanswered questions, they can always be popped in the Q&A. And otherwise, when we share this presentation, of course, we will have the link of Andrew there as well, and a link of Expat Housing Network if you want to set up an intake call to go into further detail when it comes to your specific situation. I think we got a last question popped in the Q&A.
Yes, that's already your official mortgage letter helps to get allocated a new build.
Well, not so much, unfortunately. From my personal experience, actually securing a spot within the project and having a property assigned to you, they don't that much look at your financial situation. It is only up to the moment that you commit to the project is when you will have to arrange financing yourself. When making an offer to an existing build, it is indeed highly recommended to have a letter from a mortgage advisor that can back up your financial statements, let's say. For a new build project, it's not so important. They either choose you via lottery system or first come, first serve. It is not of added value to actually present a mortgage letter beforehand.
All right, thank you.
I see some final questions pop up. We'll ask or answer these final two questions, and then if there are any other questions, we'll do that during a personal intake. I think that's easiest.
Yes. Then is it a benefit to already own a property?
No. So just like with the answer I gave before, there are no additional factors that improve your chance of being accepted within a project. I need to take my answer back on that a little bit, actually, because I know that, for example, in Amsterdam North, I'm from Amsterdam, so I keep referring to Amsterdam, but I know that Amsterdam North, if you are already living in Amsterdam North, renting in Amsterdam North and applying for a purchase property in Amsterdam North, they sometimes bump you up on the list a little bit so that they can keep the current community there and also give them the opportunity to buy a property. Not something that happens very often, but that could be one of the factors. But besides that, there aren't really any factors that improve your chances of buying a new build property.
All right, thank you. Then the final question, where can you find average prices per property since 2008?
I know the land registry has some nice numbers on that as well. There is a website called CBS, which is the Centraal Bureau van de Statistiek, Central Bureau of Statistics, very properly translated. But they are a big collector of data, and there you can find a lot of information about housing numbers as well. Average age in certain areas to indeed average prices per city in Amsterdam. Cool. I think that was it. Do we have another cool slide? Yeah, we're popping, never mind. Do you see my screen move as well?
Yeah.
All right, amateur move, I guess. Huh? Well, then we'll leave it at what it is. I can only press on the Q&A button. There we go. So instead of having a picture of me, we'll have a picture of Philip. Of course, we do have a picture of Andrew here. Thanks very much for joining us today. Like I said, if there are any specific questions about your specific situation, feel free to schedule a free intake with either of us. We look forward to finding you a right home and finding you a right mortgage. I think that's it. Thanks very much, guys. Enjoy the rest of your day. Hope you can enjoy the sun a little bit as well. Temperatures are rising, so make good use of it. And then hope to speak to you another time.
Thank you all for joining. Bye-bye.